Welcome to Debating Your Dollars, where two financial advisors have two opinions with one goal in mind, helping you make sound financial decisions around your money. We have a topic that's starting to hit the news, maybe out of the news cycle by the time we publish this, but we're going to talk about Donald Trump's idea of a 50-year mortgage and whether that's a good idea.
You can refinance with me. I'll give you 50 years.
50-year mortgage. There's a lot of ambiguity around this. I know Nico and I are going to have two very strong opinions. They may be the same. Nico is in the process of going through the mortgage process for the first time. I'm a seasoned home buyer and been through the mortgage and refinance process personally enough. I'd love to never have to go through the mortgage process again for the next 50 years. So Nico, what do you think? Is a 50-year mortgage, is it a good idea for individuals? Is it going to solve the real estate dilemma that exists right now?
I don't think it's going to solve the dilemma. Going through the process myself and having a pretty good understanding of finance.
Right.
The two things that no one really talks about when it comes to actually closing on a house is like you can have this down payment in mind. The closing costs are insane.
Right.
And it just feels like you have to go to 3 or 4 different people just to
listen,
close.
The mortgage process is
Yeah.
the least desirable thing
Yeah.
that I'd ever want to go through again.
And there's so many rules and regulations, and it's to protect the consumer. But I don't think, like, I'm buying a very standard home.
Sure.
I was definitely not quite prepared for those expenses, right? I had my emergency fund, and the expenses are taken care of, but I definitely didn't think they were going to be quite as high as they were.
Mm-hmm.
If I had to pick legislation to help the housing market, I would rather see construction credits to help build better homes cheaper for builders, because then obviously that gets passed on to consumers, or something along the lines of like maybe a first-time home buyer tax credit.
Yeah.
But I don't think the 50-year mortgage is the answer here. There's two things that I'm really worried about. And one would be, all right, if we find ourselves in a place where mortgage rates are 2% again.
Right.
Every single big financial institution in the country is buying as many homes as they can on a 50-year mortgage at 2%. So you get right back into supply problems.
So let's. This is an interesting question, and one I don't have the answer to. How do you even underwrite a loan for 50 years? 30 years.
Yeah.
Trying to think of economic cycles over 30 years.
Yeah.
That's somebody's career.
Yeah.
50 years, if you buy a house at 25, the prospect of not paying it off till 55 is long with a 30-year mortgage. But carrying that home potentially 7 to 10 years into retirement, and the way mortgages work, they're so front-loaded with interest.
Yeah.
That those last 7 years are really when you're paying off the principal.
Your house.
That I don't know, from a personal finance decision, it's not gonna help you accumulate wealth.
No.
We ran the numbers, and I think the standard home in the United States right now is about $400,000. The current 30-year interest rate is 6.33%. What does a 50-year mortgage need to be at? Is it 7? Is it 7.5? Is it 8? 50 years is a long time.
Yeah, well, put it this way. If you were buying your first house at 25 and you'd pay it off when you're 75 with a 50-year mortgage, if you're 75 right now, think about how many times you either changed jobs, had a financial struggle in 50 years, or got laid off because the economy took a turn for the worse, right? So how do you, even like you said, as a bank underwriter, how do you even...
Right. I'm 40, so I'm 47. I haven't even been here 50 years. We've been through the late 80s stock market crash. We've been through the tech wreck of the early 2000s, the financial crisis, COVID crisis. I know I'm missing a couple of recessions
Yeah.
through the process there. I kind of think about over 50 years. I'm kind of sick and tired of living through these unprecedented events.
Yeah.
But how do you, I mean, that's only 47 years.
Yeah.
How do you underwrite for 50 years? Would banks want that? Who would want 50 years worth of risk at an interest rate? So if an interest rate needs to be 7, your first payment, your first year of payments, you're paying $84 a month on your principal.
Yeah.
You don't even pay $1,000 off on the principal of the home, and you've paid $2,000 a month in interest.
Yeah.
So, hey, maybe banks will love a 50-year mortgage because they're so front-loaded. But from a personal finance perspective, if folks are feeling trapped in a house right now because they have an asset at 2%,
Yeah.
and can't, or 2.5 or 2, what would they get to? 2.5 or 2.75%. If you can't move because you love that interest rate, with a 50-year mortgage, you're not going to be able to move or upgrade, but it's going to be for a whole different reason. It's because you don't have any equity.
Yeah, and I don't understand. So obviously, for people online, we're in the Pittsburgh region. Like home prices are compared to a lot of places
Right.
in the United
We
States.
don't have the volatility here that most parts of the country experience.
we don't have the same real estate volatility. Your payments not going to be substantially lower on a 50-year mortgage
Right.
because you're still paying so much more in interest that around here, it's mind-boggling to even consider a 50-year mortgage.
Right.
You know, you get out into California, and when we went to Future Proof conference out there, you know, we stayed in Airbnb and we zeroed the house and we saw the price of the house.
Right.
You know, you're talking about a pretty average home in, say, Huntington Beach
right.
was $3-4 million. How else do you buy that house as a beginner? So
I mean,
I'm at a loss.
that's far from a starter home, and
Yeah.
you know, solving the real estate dilemma. I mean, that's a perpetual dilemma that's going to go on for eons and eons and eons. You know, so if a 50-year mortgage doesn't solve it, how do we, you know, do we grease the edges with stuff like
Yeah.
tax credits and first-time home buyer credits? Yeah, I mean, I love a tax credit.
Yeah.
Who doesn't love a tax credit? You know, making houses affordable. I'm a free market guy,
Yeah.
so I wholeheartedly believe in the forces of supply and demand, and whether it's gas in my tank or my home, you know, your supply and demand, you're also rewarded for good financial decisions.
Yeah.
So being prudent about the type of home you buy, the region you buy it in, is important. But solving the real estate dilemma, how do we get more? Because inventory stinks.
Yeah, there's no inventory. Well, when people had 2% rates, they're not selling that house because
Right.
they're going to sell that house and they're going to pay 5 or 6 right now another house. So they don't even want to move.
Right.
But then there's this inflow of new buyers and there's nothing to buy.
There's nothing to buy.
So they're renting and
Right.
it's driving rent up too. So rent and housing, I would say that's one of the biggest crises in the United States
Sure.
right now. Like, I don't know the answer. You need home builders to build houses. I think one of the things that really got carried away when rates were 2% for so long is people could afford a lot of home. People could afford those $400,000 or $500,000 houses around here pretty easily. And so what started to happen is home builders were like, we're just going to build $400,000 or $500,000 houses. There's probably more profit margin
Right.
or something along the lines. That's what people wanted. That's where the demand was. If you look around the roads, even here, they're not building
No.
$200,000 houses. Like there's not starter homes. That's why ranches have increased in value so much. Like
you may not be able to build a starter. I mean,
yeah,
I've never built a house, so I don't know. I mean, the mortgage and moving process is painful enough. Let alone you put the construction process on top of that.
yeah.
I'm not interested, but I'm not. I haven't been interested yet. But how do you may not be able to build a $200,000 house.
Yeah.
You know, how is it a house that anybody wants? So we've moved very quickly from $100,000 home being what folks didn't want to now you can't even find or buy a $250,000 house. The average home is $400,000
Yeah.
already, and that's well above the house that I have or the house that I purchased. You know, with appreciation, we're happy, but
That's
you know,
really,
I have a 14-year-old son. What the hell is he going to buy? How do we solve this? Because I mean, I'm sure the stats exist. The market's up, home prices are up.
yeah.
Are wages up?
I don't know. I think supply and demand controls it all still.
Sure, agreed.
It's with it, like, how do you increase wages with
Again,
a lower demand? You know, like
that's
a
another,
total
another debate for another day.
It's a whole,
But no, I agree that I don't have a solution for it. But I'm in my opinion, the 50-year mortgage is not the solution because with where the interest rate goes to, your payment may be higher.
yeah.
You know, do they become a floating rate after a certain time frame? I don't.
It's not
like,
going to be
you're
substantially.
achieving very little to any equity in your home, which by and large is a lot of people's largest asset, especially early on in their life.
Yeah.
So they're building no additional net worth. They're building no additional mobility because they have no equity.
Yeah.
You know, what's the down payment going to need to be?
Well, I think it goes hand in hand too with, all right, why are people buying homes later? And student loans weren't what they were
Right.
20 years ago. You know, kids are leaving college with,
Do you think work from home has people renting more? Because if you can work from anywhere you want, this year I want to work from Manhattan. Next year I may want to work from Breckenridge. And the
Yeah.
week after or the year after that, I may want to work from Huntington Beach. So why would I buy a house when I have this? I mean, I know that when I left college, if my first job was work from home,
Yeah.
I wouldn't have left college.
yeah,
I'd have still lived at school in an apartment and perpetuated that.
Yeah.
So, you know, there are a lot of forces at work when it comes to real estate. Rent may be up because folks want to work from wherever they want and make that change every year when their leases do.
all right, so you have to take a 50-year loan. You're in a position, you have nowhere else to go. You have to take a 50-year loan out on the house. What are you doing to combat the interest?
I mean, obviously we know that changing the frequency to twice a month helps drive it down. I mean, I would want to be as aggressive as possible,
Yeah.
but I'd want to be aggressive as possible on a 30-year loan too, because it's, you know, the idea on a 30-year is, well, compared to the 15, you can turn a 30-year into a 17-year mortgage by making
Similar payments.
one more
Yeah,
principal payment a year, I think. But in addition, you can also invest the difference because there's a big enough difference in the price or in the cost. I don't know how that exists in a 50-year loan
Yeah.
when the interest rate
You're paying so much interest.
right.
You're paying.
I just you would have to attack that principle
Yeah.
to try to cut that duration to 40 years.
Yeah, it's almost like you're in a position where you're not going to be. It becomes a bad debt almost. Like,
Yeah.
typically when we discuss like bad debts, a mortgage is typically not
Sure,
a
right.
bad debt, but a 50-year. You know, you look at the interest up front. The first 10 years of that loan.
I asked the question, you know, are you going to be able to have the same standard down payment? Because you're so slow to build any equity at that 50-year rate. The it should require a higher
Down payment.
down payment.
Yeah.
The banks,
You think they'd want it,
if
for
your
security.
mortgage underwriter is on his first day of the job and stays at that bank, he's never going to see a loan completed in his career.
Yeah.
It's just wild to think that. I mean, again, high interest rate for 50 years, banks may love it.
Yeah.
I don't see it being the solution.
Do you think they push, so similar to student loans, right? An employer match now, in certain scenarios, employees are able to use the employer match to help pay off student loans. Does it become with a 50-year mortgage? Do you think they allow them to
No.
pay their mortgage?
No, I think that's because what do you do with the kid that rents? With the guy that rents?
Well, he could just get his employee match like normal.
I think we're starting to drift too far into the
over leveraged.
Yeah.
Yeah.
So no, I don't think a 50-year mortgage is a good idea. I know if any of our clients were in here asking us what we think they should do, I would strongly consider either renting
Yeah.
for an additional period of time or maybe change our outlook on the types of homes we should live in.
Yeah.
That's a
realistic fact. I think a lot of people expect their home to be a lot bigger. Like I know growing up, we've moved, like over the years.
Well, and listen, we got overinflated home prices for homes we couldn't afford that were too big in markets that weren't sustainable. Got us into trouble once, not too long ago.
Yeah.
We don't want that to happen again.
No,
that was not pretty. So I'm full stop. No, don't think a 50-year mortgage is something that I would want to participate in. Would encourage our clients to participate in, and I don't think it's going to solve anything. I think it's going to make things worse.
I agree. Focus on the total cost of the purchase, not the payment.
Yeah.
Always keep that in mind as a consumer with any debt you take on.
Yep. Buy the asset, not the payment.
Yeah. Total cost, not the payment.
Yep.
Don't focus on that payment number.
So what's your opinion? Let us know in the comments. Do you think the 50-year mortgage is a good idea? Is it a bad idea? Is it something you would participate in? Make sure you follow our channel for more debate-style videos like this and topics that may interest you and help you decipher on how to spend your dollars.